What is going on, traders? Welcome back to the Traveling Trader. So the month of July is upon us. Happy 4th of July, by the way, for my friends in the United States. From a stock perspective, this could be the most pivotal month this year. No exaggeration. Are we in an inflationary period? Has inflation curbed and we are now back to deflation? Is the Delta variant going to have any effects on the markets themselves? Are interest rates going to rise? What does that mean for stocks? Which stocks should we be in? So in this video, I'm going to break it down all for you, give you as much nuance and detail as possible, and tell you what are the top 5 stocks that I'm looking at for July 2021. These are high growth stocks that I think will be relevant for July 2021 and beyond. If you get anything out of this video, leave it a big fat thumbs up just like this. Let me know in the comment section which one of these stocks you are trading and whether there is something that is not on my radar that is on yours. I love to hear from you each and every time. And without further ado, let's get right into it. We'll start with a market update. I'll give you a state of affairs. And then we will jump into the top 5 stocks that I'm looking at, so you definitely want to stick around till the end of the video. Okay, so the Delta variant, as I've spoken about before, and please keep in mind, I'm not a doctor, even though I may look like one. I don't, but just keep that in mind when I talk about the Delta variant. So as I was saying before, the news with regards to the Delta variant, to me, has been a little bit one-sided and maybe overblown, because even though, yes, infections are on the rise from the Delta variant in various different countries, the rate of hospitalization and deaths have actually not increased, even though we are seeing an increase in infection rates. This means that the vaccines are likely working, including for the Delta variant. And if we take a look at this article here from Seeking Alpha, we can see that JP Morgan says the same thing. They looked at the 15 countries most affected by Delta and discovered that in 10 out of the 15 countries, cases declined, and in 13 out of the 15 countries, fatalities declined as the variant took over the share of new cases. And again, we can't predict the future. I'm not going to speak on any potential further variants. However, from the information that we know now, it looks like the market is pricing in the fact that the COVID pandemic is more or less behind us. Well, what does it mean that we're near the end of the pandemic and that being priced in? What does that mean for the stock market itself? Well, in my view, that means that the Fed will start tapering bond buying at least. I don't think they will raise rates in 2021. I'm on record as saying I think that they cannot avoid raising rates in 2022, especially if we hit that hyperinflation in 2022. However, for 2021, I do think they will start having to taper. But what does that mean? Well, that means that they will buy less bonds. So what will that do to bond yields? Well, bond yields will actually go up because there's an inverse relationship between the price of bonds and the bond yields. If there isn't anybody buying bonds, right, or if there's less bond buying, then the rates will have to go up to attract new investors. You can even take a look at some of these metrics that we use to judge whether we are in an inflationary period or not. And you could see that they are starting to come down all across the board, from CPI to retail sales to jobless claims. Well, actual jobless claims are up, meaning there is an inverse relationship between unemployment and inflation usually, where the higher the unemployment rate, the lower the inflation is, and vice versa. But all across the board, you can screenshot this or you could pause it. You could take a look at all the metrics. For all intents and purposes, it does look like the economy is actually slowing down from that hyper growth period we saw rising out of the pandemic. So in July, if we're expecting yields to rise and potentially bond buying to taper, then that is bad for growth stocks. And I'll explain why in a second, but that is bad for growth stocks, good for value stocks. So we will likely see a rotation back to the cyclical value trade, which in July's picks, you will see most of our picks fall under that category. Now, a growth stock is usually a stock that doesn't pay a dividend. It grows at a steady rate or a somewhat steady rate year over year in terms of earnings, in terms of market cap, etc. Usually big tech falls into this category. Value stocks could be cyclical, but not necessarily. They usually pay a dividend, and they are currently undervalued based on a whole host of metrics that we don't have to go into today. But think of bank stocks, energy stocks, oil stocks, retail, infrastructure stocks, etc., falling under this value category. Now, before we get into the top 5 high growth stocks for July 2021, let me tell you what we did as a hedge in the trading group. And if you want access to all of our trades, link is in the description below. Actually, if you watch my last video on Tesla and NIO, there was a Tesla trade that I put in the video, which was part of the alerts in the trading group. We bought the 675, 680 call spread on Tesla, closed that out for 85% the next day because we expected Tesla to report positive deliveries. Check that last video out if you want. But again, if you want access to all of our trades, link is in the description below. Come be a part of the movement. So we bought puts on TLT because I'm expecting rates to rise in July. I don't know when, so they are a bit long dated. But remember, when rates rise, the bond prices drop. So I'm expecting TLT to drop as the rates rise. All right, so here are the top 5 stocks that I'm looking at right now. First one, Harley Davidson, HOG. Now, we played HOG before. Obviously, it has run up quite a bit, but HOG has, in my view, a significant room to run. Now, I just happened to find Harley Davidson's performance in July going back 27 years. 20 out of the 27 years, or 74% of the time, HOG actually has an average gain of 6.5%, especially since people tend to buy more motorcycles during the summertime, but it also has earnings coming up in July 20th. Now, this isn't a short-term trade, so I don't want you to think that you're going to buy it and make money in July. It very well could be the case, but this is more of a long-term trade for the rest of 2021, just finding a value retail play that has an 11% upside just to get back to recent highs. We see it turning green on the MACD, and I think this is a good spot to dollar cost average if you are looking for that slow, steady growth in a value stock. This thing is not going to make you rich overnight. Stock number 2, I really like the setup here. This is US Bank sitting at the 100-day moving average. Now, if rates have to rise in July, that is good for bank stocks, albeit the fact that the bank stocks also passed the very intensive stress test imposed on it by the Federal Reserve. And most of the big banks in the US initiated stock buybacks as well as increased dividends. So at the 100-day moving average, I'm willing to buy a lot of the major banks, whether we're talking about Citigroup, whether we're talking about Key, whether we're talking about Capital One, US Bank, JP Morgan, etc. But right now, looking at the setup, I do like US Bank here. All right, stock number 3, another value stock, this one being in the retail sector again, or pharmaceutical retail, I guess. WBA, Wall Street Boots Alliance. If you're a fan of this channel, you know how much I love overreactions. Now, they actually crushed earnings, okay? So they recently reported earnings on June 30th. Now, why did it tank? Well, because the market, it was a sell the news event, and the market interpreted its earnings as benefiting largely from the COVID pandemic. However, dropping almost 10% in 2 days is music to my ears on a profitable value stock. Now, it just hit oversold on the RSI. Prudent investors will want to wait for it to find support. It looks like it could actually find support here, where it did going all the way back to January. So this is now 6 months in the making, the support level here. But prudent investors will want to wait for a couple of candles of support before jumping in something like this. Just to get back to recent highs, there's an 18% upside here. All right, stock number 4 that I'm looking at is Altria Group, or MO. Altria manufactures tobacco products. They're also in the vaping game, and they do have a smaller sector in the wine business, right? But if you take a look at value, this is the typical definition of value here. If you look at its PE non-GAAP, for instance, it's currently trading at around 11, right? The sector median is 18.5. So it is almost 40% undervalued compared to the sector median. Now, the reason that this isn't a growth stock, just to give you an example of a growth stock versus value stock, you can see that their annual revenue is pretty stable, right? As opposed to something like Microsoft or Apple or Amazon, where the revenues just keep on climbing year after year and it seems endless. So this is a traditional value stock here. They pay a healthy 86-cent dividend. Again, they are reporting earnings in July, currently sitting around the 100-day moving average here, potentially forming a double bottom. I do like this as a dollar cost averaging point here. Don't mind buying into Altria here. Again, keep in mind that these are long-term plays. These are not swing trades. Please do not use these videos as swing trades. Although I do send out a lot of swing trades and options plays in the Discord, but it doesn't really play well in a video that you might see 2 weeks down the line. All right, and stock number 5 is LVS, or Las Vegas Sands. Las Vegas Sands currently broke the trend line. Now, I do want to wait here to see if it can break back above the trend line before jumping in, or whether it will fail to this line of support here at around the $48 mark. But right before the pandemic, LVS was trading in the $71, $72 range. Las Vegas continues to be one of the hottest booking locations for people that are looking to travel after the pandemic is over. It currently is bouncing off of the oversold level on both the RSI and the MFI, as you can see here. You could start dollar cost averaging here, in my opinion, but like I said, prudent investors will want to wait for it to get back above the trend line, which is closing above the $55 mark or so. All right, and just to give you some bonus trades, a couple of other things things that I'm looking at. OCGN, we earned 17% on Friday. I've talked about this stock before and why it is definitely on the riskier list, but why I think OCGN could see a breakthrough in price. The other thing that I'm looking at is CTXR, or Citius Pharmaceuticals. This is a penny stock currently sitting at support around the 100-day moving average. And I'm also looking at getting back into lumber futures. After lumber found support here at the 300-day moving average, we could see that the MACD is starting to turn bullish. We could see that the RSI is oversold, the MFI is oversold. This is a perfect setup for lumber futures. This also happens to represent a previous support level that we saw on lumber. And especially if we're expecting inflation to start kicking back in after a brief period of deflation, I want to jump into some of these commodities that have sold off from all-time highs. So lumber currently trading at around more than half of what it was trading just a couple of months ago. So looking to get back into lumber futures as well. Again, if you want access to all of our trades, link is in the description below. Would love to have you. Hit that thumbs up if you got anything out of this video. Subscribe to the channel. Hit that notification bell. Stay safe out there, traders. Peace.